Hey, what's up traders? Today I'm going to teach you guys a very important 6-minute zone that will help you identify your weekly and your daily bias. So before I start this video, I actually just want to show you guys a really quick example of what I'm trying to talk about. This is called the Nano range, and it is a 6-minute range that we can draw out for the rest of the week. This is specifically going to be the weekly Nano range, hence we draw it out for the rest of the week. And it's going to be the range, the high and the low of the first 6 minutes from 6 o'clock till 6:06. And it's going to give us this very tiny range. Now, I know you guys are going to be telling me, bro, what do you mean this tiny range for the rest of the week? Okay, we're going to go to the 15-minute and we're going to draw out until the following Friday of that week. Here we go. So that's Monday, Tuesday, Wednesday, Thursday, and Friday. Look at how price throughout this week kept on drawing towards and or distributing away from this initial 6 minutes created at the start of the week. Here we can see we have a close above, price coming back to that nano, reacting to go higher. Where is that retouch, that turtle soup? Where is it reacting from? It's reacting from that nano range. Same thing here, nano range, nano range. Where does price go to once we close below it and react from it? The nano range. Same thing here. It happens throughout every single week. Let's show you guys a one that we can use throughout the entire day. This is the daily nano range. Now that we have identified the weekly nano range on the Monday, we're going to need the daily nano range as well to identify the daily bias. So we have the weekly bias of where we can reverse or trade towards. But now if we have one on the daily, we can kind of identify where the profiles most necessarily are going to go towards comparative to where we are in the day. The specific profiles that we're going to be trading is going to be the New York AM and the New York PM. So coming into this, the only rule that I have is specifically that if we're above the daily and the weekly nano range, we're just going to be looking for sells. So every time we react from a profile edge, every time we have a candle count from a standard deviation, every time we have a clean breakout from the MCR on the bottom side, we're going to be taking those sells. And then the same thing is going to be going if we're below the daily or below the weekly. We're just going to be looking for buys. So let's take that same concept and use it for the rest of this week on the Tuesday, Wednesday, Thursday, and the Friday. Let's see how price moves on the previous week just on this. So let's mark out our daily nano range. After we identify our daily and our weekly nano range, let's look back at the rules. If we're above the daily and the weekly, we're only going to be looking for sells. So we're only looking for sells right now. And a point of entry that we could be reacting off of, especially from the MCR, is going to be a profile edge, a standard deviation, or any sort of fortification edge from the MCR itself. So let's look at the higher time frame to see what is right next to this profile. So we can actually see right here, we have on this previous profile, we have a giant 15-minute wick that is going to become the profile edge of secret. So we have secret edge below and above, and then we have New York opening up inside of secret itself. So we have our area of interest that price is probably going to be reversing from. We already know that the daily and the weekly is indicating that we need to sell. And now that we have a point of entry to sell from, all we need is a candle count every single time that we get back into this point of entry. So there's a candle count. Could have went 18 ticks. Here's a candle count. And a candle count is specifically just when price closes below the highest point before it gets taken out again. So this candle closed below the highest candle of this move. That is a candle count. You could have went 18 ticks right there. We reacted back from that original 0 candle of the candle count. And you could have went 18 ticks right here as well. Trading towards our 1800. So we're currently looking at the Wednesday right now. The Wednesday 1800, let's mark out the daily nano range. So we have our daily nano and then we have our weekly nano right now. Every single time price was below these 2 points of entries, we went bullish. And now specifically, I want us to look at a reason not to trade is if we're going to be opening up in between any of these two or on top of any of these two, I want us to rather wait. It is much better to trade towards these 2 points of entry than actually trying to trade away from it. So if we're coming to our New York AM, we opened up on top of the weekly, kind of inside the two. So we're not going to be looking for trades. And if anything like this happens, I want you to specifically wait until the next profile, or at least close to the end of that current profile. So if we had to wait until PM, what are we going to be looking for price to be reacting off of? It's going to be those profile edges, or it's going to be the edges of the MCR itself. So if we were in PM and we had to get a point of entry, where would we find a 15-minute wick? It's going to be off of that previous profile. So we're going to mark that as profile edge. And then what we could do is every single time we come into that profile edge, obviously with means of MCR, so we have to be trading off an edge towards another edge. We could be taking 0 candles to continue lower. So every single time we had price create candle closures from that range, you could have an 18 tick stopped entry to go lower. Let's mark out more. And then we had one failing right here. Specifically in a case like this, I know a few people would have wanted to go long when it comes to closing above this profile edge on the 1 minute. The thing about confirming is you have to have price close above the profile edge and then have a continuation. So that candle itself or a following candle needs to close above that initial candle trying to close above. Otherwise, this edge of that same candle is actually just becoming like a retracement point for price to get into like a premium to go lower. So these are multiple entries that you could have taken from that same profile edge. And look, that following profile. Look at that big dump. Okay, so now we're going to look for our daily Nano range on the Thursday. So let's mark this out. This is going to be the first 6 minutes of the 1800. Let's get this a template. There we go, daily Nano range. So the rules are what? Every time we're below the daily and every time we're below the weekly, we're only going to be looking for buys. So if we were in New York AM and we were only looking for buys, what do we see? We see the start of New York AM specifically making a breakout on the top of New York AM. It had its retest and continued. So that was a very good first entry for people trying to do the breakouts. But we are not going to catch that. We are probably not going to catch that. So we are going to be looking for price to do some sort of like pullback or reaction. So I know previously I've spoken about profile edges, but let's just this time talk about standard deviation as a means of reversal. We could see price reversing off of 2 standard deviation cleanly, creating a very nice wick at the top where price retested and continued from. And then from a previous video, specifically the 30-minute course video that I did, I spoke about reversal points on standard deviation of 0.5 until 1.5. So if this was our retracement and we were only looking for premium, that's a really good point that you could be looking for. So if we knew we needed to buy, price should not have gone further than the 1.5 standard deviation. So if it is not going to go past the 1.5 standard deviation and we're only looking for buys, this entire area is going to become our point of entry for price to continue higher. And we can see once we touch that standard deviation, even if we took this candle itself as our 0 candle, we had a clean break above, retest of that original candle. You do your 18 ticks, and then you trade towards the weekly or the daily 1800. We are currently looking at Friday, and this Friday Nano range created a hilariously large Nano range. I believe this was over 100 ticks. yeah, 107, 106 ticks. That's kind of big. So put this in perspective, 6 minutes created a range that is possibly larger than New York AM of the previous day. Like that is a big range. So specifically on this Friday, would not have traded. We can clearly see throughout this week, all Nano ranges kind of 10 to 20 ticks, maybe. Like that's on the large side. So if we were only looking for sells, we can see price. It's not selling. It's not doing that. Why? Every single previous example that I showed throughout this week, we failed at a profile edge or we had standard deviation reaction, but still at a profile edge. Right here, we have price closing above coil, or 1800, coil closing above 1800. And then we have London closing above coil. And then we have secret closing above London. And then we have AM closing above secret. And then PM staying inside of AM. So everything is like daisy chaining or like reacting off of every previous profile, because that's what the profiles are there to tell us, is where price is going to react off of a previous range. So if we knew price at these points after creating candle closures above every single profile and we're not selling, what are some things that we can use to identify the price wants to sell? A thing that we can use is something called the Markov indicator, and it's an indicator that we sell on our Discord. There will be a lot more information about what this tool does and how it works in the Discord itself. You can also ask questions about it. But the simple way is that it's like a pivot indicator that is specifically calculated through candle closures or candle science. And those are things that I have explained on my YouTube before. So we can see that we get our first pivot on New York AM right around this point. So if we had to draw out the open of that pivot, we can see price pulling back and reacting from that same pivot open. And then just below that, we have a momentum indicator that is going to help us identify where money flow is sitting and how far extended the range or buyers would be comparative to the money flow. So we can see money flow is bearish and we can see it's oversaturated in buyers. And then we have a crossover literally on that next candle giving us an indication of selling. So we have the indicators, and I know a lot of people are like, dude, why are you trading indicators? The thing is, these indicators are calculated specifically towards our model, so we can use it to help aid in our trades. I wouldn't specifically follow them blindly. There always needs to be a reason for your trade, always a higher time frame point of entry, always a candle closure, always candle counts. But they will help you identify early on directional bias from the candle closures itself. If you guys can add this into your trading at least to help identify daily bias, mission complete. If you guys learned anything from this video or anything new, please leave a like, comment down below, and please subscribe to the channel. It really does help. There will be more types of content coming out in the next 2 weeks, so stay tuned for that. And I'll see you guys very, very soon.